Prateek Agrawal joins us. Let's take our conversation forward with him. Prateek, good morning. Thank you for joining us.
Good morning.
What do you make of the start for 2023 so far? India is underperforming, gold is outperforming, emerging markets are getting inflows, and India is getting outflows.
Sure. So maybe last year we had our stroke of luck when FPIs, decided to not look at Russia and China for their issues. This time around, the new year is coinciding with China opening up and their markets doing vastly better and, forcing some amount of realignment. To my mind, at this point in time, it is nothing more than that. Indian flows are way more structural than FPI outflows. And in periods of outflows, the domestic money gets a great chance to get itself invested for returns, whenever the selling subsides.
At Motilal Oswal AMC, your big holding essentially is financials. Financials have done rather well. And if the quarterly update and the HDFC Bank numbers are anything to go by, looks like the momentum is here to stay. Do you think financials per se are in a 2-3 year kind of a bull market, or it could be that IT moment where 1 year was good, second year was okay, and third year is bad?
See, if we look at the capital intensity of an economy, it increases as the economy gains in size. We expect the same to happen in India as well. Now, which means on the sales side, total incomes, the financial should grow faster than the economy itself. And there, if we look at market share gains, then you have few names which can do significantly better. Now, what makes the financial space volatile and cyclical is the one, margins, which again have sustained for a very long period of time in India, and two, NPAs. Now, the last bad cycle, we saw NPAs like never before. If from that, the financials have learned lessons, tightened processes, and if that is not going to recur in future, then I think financials could become a multi-year play. Else, it is almost always 2-3 good years, and then we get again the NPA cycle, and the sector takes a backseat.
Prateek, so where within this market are you finding comfort to buy afresh? I mean, have there been pockets of value which have emerged in the recent bout of underperformance?
Yeah, no, so this is a market which we have been saying is finely valued, fully valued. So no spaces which are very cheap. If something is cheap, is with a reason. So good manner of investing in such a market is to probably look at spaces where there are tailwinds, which can result in some positive surprises as we go ahead in time. So I think the conversation started with banks, lenders. I think that continues to be the theme that we are focused on for the immediate term. In financials, I think we are increasingly focused on life insurance companies and health insurance companies. So for one, we will see probably EVs rising in line with new business in the immediate future. And then as the interest rates peak out and start to decline, maybe EVs rising ahead of new business momentum. And for health, well, COVID is behind us. It doesn't seem to be coming back, which means the payouts would decline. So similarly in healthcare, we do believe that versus branded generic businesses, something like hospitals stand out. So or maybe even pharmacy chains. So, apart from the older themes like China Plus One, benefiting chemicals, and so on, so a lot of those continue. Defense continues, engineering continues, but then the big Alpha could be made from, let's say, lenders, could be made from insurance kind of spaces.
Prateek, hi, morning. What's your outlook in terms of what the expectation will be from the budget and thereby any particular sectors like, say, cement or infrastructure that you'd be looking at closely?
So budget, to my mind, would continue to focus on nation building and growth. The world is doing that. We should not be an exception. Government finances are looking good. So I think we should hope to get more of what we got in the last budget. Uh, Developing investable themes from there, let the budget happen and then we will form. But otherwise, in most cases, newer themes don't emerge anymore because budgets are an exercise more and more in continuity. So if PLI schemes are being rolled out, we may see more of them. Allocations for railway, for example, where there is a big bump up in capex expected going forward. That the budget should be expected to provide. But the theme started before, theme continues. It may provide handholding to stressed out sectors, which always happens. Government lends a helping hand. But then that is simply a trade. For long-term investors, one should be focused on spaces which are doing well and are expected to continue to do well, at least slightly deeper into the future rather than get in and get out at the budget time period kind of a trade, which is very, very difficult to execute.
I speak to a lot of retail investors. Now, the simple view is that we are getting 9% return in banks. Mutual funds have not given me great returns in last 2 years. Why should I not put my money in banks where I'm getting 9% versus a promise of 12-13%? Because if I'm maximum upside from here in next 12 to 18 months, looking at the valuation is 12 to 13%. That's also not guaranteed. Here you get 9%, which is guaranteed. And if you're in a lower tax bracket, the tax bracket also will take care the taxation is not very high.
Yeah, no, so completely agree. And we have been saying this in our write-ups and videos that today, risk-adjusted basis, debt looks better than equity. Now, this thing can sort out in many ways. One, interest rates peak out and maybe decline a bit towards the end of the year. So yes, debt will make more returns, but then equity will get competitive, or equity moves sideways for a quarter or two, and then for the rest of the year, if you make the same call of 12 odd percent versus 6% then of debt, it will become compelling. So, in sum and substance of what you are saying is you expect equity to consolidate for a quarter, entirely possible, also my view.
China opening up, disbalance things. We're already seeing a huge spike in metal prices, for instance, in just the week gone by. Bitcoin has made the comeback. I don't know if there's any correlation here. But back home, you think the chemical sector would continue to have the China plus one advantage?
Yeah, so those are long period themes. The West wants to now source from more than one geography. In chemicals, we are the only other ecosystem that exists, and most chemical companies that one speaks to talk of growth sustaining, if not accelerating. So this is volume growth. On top of that, you build in pricing and margins. So there we may see some amount of volatility and a downtick. But for somebody who can hold through longer periods, I think this is a space which should tend to outperform given the very, very strong volume growth that we see going forward.
You recently, Prateek, gave a view that you find new age tech companies have turned attractive now after the recent sell-off. Help us understand where within this large pool do you scout for opportunities and whether you've already added something to your declared portfolios?
So I don't do names, but I'll give you the thesis. There was a time when the IPOs happened, and these tech companies wanted to do everything under the sun, which meant that the losses could be there for a very, very long period of time, which is something that in a listed space, it is very, very difficult to get clued on. Now, the change is that after the battering the space has received post listing, most of the guys are talking of path to profitability, at least on the EBITDA level, and that too in foreseeable future, 2 quarter, 3 quarter kind of stuff. Uh, I think we would be watching that if it happens. These are spaces which can result in a very, very sharp turnaround in profit from a minus X crores to plus X crores and maybe 2X, 3X crores. So the profits when they emerge could very rapidly become multiple of the losses that have been incurred so far. That's the promise of the space. The trajectories in many businesses point towards that, and I think we are very, very clued on there. So many of these businesses, if you ask whether they will be there 10 years hence, the answer is a clear yes. Valuations make sense to me now. So these are businesses where we may have stressed investors who may be wanting to get out. So a lot of volatility will be there because of change in hands. These are not businesses mostly where the promoter entity holds a large stake. So practically everybody is a public shareholder, and the change in hands will cause some volatility. But good businesses and not so strong hand is the manner of looking at this space. On the business side, we are very positive.
Okay, Prateek, point taken. Great to have you on the show. We'll let you go on that note. Good speaking with you as always. Let's take a
Thank
very
you.
quick break. Come right back. We'll have the Greaves